For more on today's insider trading developments, we turn to Harvey Pitt, the former chairman of the Securities and Exchange Commission. He is now the founder and CEO of Colorama Partners, and he joins us now from Washington. Mr. Pitt, welcome to Bloomberg News. Thank you so much for coming in today.
It's good to be with you, Mark.
Sir, what are you making of these investigations, at least what you've heard so far?
Well, I think this is obviously a fairly significant undertaking by the government. I think the fact that the leaks about this have come from the government indicates that the government wants everyone to sit up and take notice of exactly what it's in the process of putting together.
Okay, you say that the government wants people to basically create what he called the illusion of three dimensions. What does that mean?
Well, we used to say at the SEC we wanted to create the illusion of three dimensions, meaning we wanted people to think that the agency was everywhere, that if you did something that was wrong, somebody would be watching you, and that is part of what's going on right now.
Can you give us a little bit more detail, and I mean in the context of the SEC is taking a beating over the last couple of years. You're probably more aware of that than anybody else. The current head, Mary Shapiro, had come under fire. I believe it was Christopher Dodd, the outgoing chairman of the Senate Banking Committee, who called the SEC a watchdog with no bite. Is this another example of the SEC trying to ensure people that it is, again, the watchdog on the beat?
I think this is an example of the renewed vitality and vigor at the Commission. I think Chairman Shapiro has been doing a spectacular job of restoring the credibility and the reputation of the agency. Letting people know that you're out there and that you're proceeding on a big major case like this is a good way to make people sit up and take notice.
Speaking of sitting up and take notice, these are reportedly insider trading investigations. During this day and age, especially during this economic downturn, how prevalent is insider trading in your estimation?
I think insider trading has been prevalent in a lot of environments, but particularly in a down economy, people looking to boost their performance and show results to their investors are going to, in some cases, unfortunately, try to cut corners. And when that happens, the government has to be there to say that is not permissible and will come after you hammer and tongue.
The Wall Street Journal is reporting that this has been a 3-year criminal and civil investigation and that charges could result by the end of the year. Is that length of time unusual?
Not at all, particularly given the greater difficulty there is these days in making these cases. With so much digital information available, government prosecutors and regulators have to be certain that they have the goods before they charge somebody and ruin their reputation. So this kind of time frame, particularly in a criminal action, is fairly standard.
Is this a marketplace that has not been regulated a lot, do you think?
This is a marketplace that has largely been unregulated, and that is part of the significance of what the investigation means for that industry. The SEC is in the process of writing rules for the first time in history to govern hedge funds, and you can be certain that these events will play a significant role in how the commissioners decide to vote on various regulations and compliance obligations.
And you're making reference there to the fact that the SEC did propose on Friday to require hedge funds and private equity funds to submit to inspections and new disclosure requirements without the Dodd-Frank Act into law. Is this something that would have happened?
It was something that was tried, but the courts ruled that the SEC did not have the authority to do this under the existing law, and Dodd-Frank has now made it unmistakably clear that the SEC has this authority. The bigger issue is how the SEC is going to manage examining and regulating another 8,000 regulated entities. That is a massive undertaking, and that will test the SEC's mettle in ways never before seen.
The commissioners agreed to exempt venture capital firms from the registration requirements. Why?
The clear intent was to exclude venture capital at this particular point in time, as long as that's the sole activity in which the enterprise is engaged. If the enterprise is engaged in acquiring interests and taking over firms, then it won't qualify as a venture capital firm. I think the SEC is trying to start out by defining limited terrain that makes sense given all the other obligations that have been imposed on it.
Mr. Pitt, for the average viewer who might not understand the complexities of what's going on, what is the significance of this? And if you could, the significance of the damage that insider trading causes just for ordinary investors?
Well, taking the latter half first of your question, the damage is it erodes confidence and trust in markets. The markets only function if people believe that they get a fair shake. When some people can cheat and have access to information that the rest of us don't have, that makes the marketplace unfair, and the SEC is charged with ensuring that the marketplace operates fairly. So I think the significance of this is enormous, and it's important to ensure that people have confidence in the marketplace and will continue to invest money in companies believing the markets operate fairly. In terms of the significance, the FBI action is an effort to get a hold of documents and emails and computers and the like that may indicate the kinds of networking that went on in some of these cases. At least that's what they're looking for. And this, again, is a standard practice, but it is a significant invasive action when the FBI comes in and effectively seizes all of the company's records and data.
Sir, the significance then of the Securities and Exchange Commission working hand in hand with the FBI. As you're no doubt aware, in Washington sometimes there can be turf wars and one agency wants to try to one-up the other. It seems that maybe both agencies in this instance are in fact working together.
They are, and I think that has traditionally been the case. The SEC and the U.S. Attorney's Office in New York have had a long-standing close relationship and have worked very, very well together, and the current personnel in both agencies are devoted to making sure that they perform effectively, and that is clearly what is going on right now.
Mr. Pitt, you suggested that this information was leaked to the press so that the full force and weight of the Federal Bureau of Investigation and the SEC could be brought to bear, basically telling the marketplace that you can run but you can't hide. Is this also a not-so-subtle suggestion for people who might have information about any illegalities or improprieties to come forward at this time before things get worse?
Absolutely, and indeed in Dodd-Frank there is a new whistleblower provision which permits people who provide significant assistance to the government with hard information to recoup up to between 10 and 30% of the amounts of any recoveries that the government makes. So this is a significant invitation, if you will, for those people who have information to step forward. It's also an invitation to all of the firms in the related industries to look at their compliance procedures and policies now before they wind up getting caught in this kind of web of unlawful activity.
Mr. Pitt, in our last 30 seconds going forward, as we look at the role of the SEC and its attempts at transparency in the marketplace, does the Dodd-Frank Act actually muscle up in that regard?
Well, the Dodd-Frank bill, unfortunately, is too big, and it imposes far too many obligations on the SEC, which is a cause for concern.
All right.
But I think that the SEC's transparency is
Mr.
proceeding.
Pitt, we'll have to leave it there. Thanks.